Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But let's see how the stock reacts. Tata Motors, Sonia?
Well, a Moody's downgrade has come through. It doesn't come as a surprise. I mean, we all know that the fundamentals of Tata Motors have been deteriorating, and generally credit rating agencies are the last ones to sort of, come out with such details. Moody's has kept the outlook stable, but they have downgraded the corporate family rating from BA1 to BA2. They've also downgraded the senior unsecured instrument rating from BA1 to BA2. They state the obvious. They expect continued weakness in credit metrics over 2 years, led by JLR. They say that the rising commodity prices and operating challenges will keep the margins below 3% overall, and the balance sheet is very stretched now. So the debt to EBITDA has risen to almost 4 times as of March 2018 and is likely to remain elevated. And finally, they also talk about how the company has a large capital expenditure and that could put further pressure on their balance sheet.
I personally think this will not have any impact. Yeah. Rating agencies are always the last to realize.
That's what I said. They're always the last ones to come out.
I think
sometimes that's the bottoming out indicator.
Moody's, and exactly. That to Moody's. I would think if it's Standard & Poor would be, Moody's is not really the most important.
Yeah, but for Tata Motors, you need to see one reversal of JLR numbers. Before that, it's the hope trade does not work. But Dr. Reddy's now it had launched Suboxone, of course, at risk. Now the final outcome is not known, but there's a bit of a setback that there's a injunction on that, Ekta.
Well, yes, Anuj, actually, it is a significant negative for Dr. Reddy's because this temporary injunction which the court had put on Dr. Reddy's from selling that particular drug, Suboxone generic, at risk in the US market has now turned into a preliminary injunction. So the court has said that you have to solve your pending patent litigation that you have with the innovator of the drug, Indivior, and only then can you decide whether you can sell this particular drug at risk or not. So that is definitely an opportunity loss for Dr. Reddy's, because by the time they can enter the market for this particular drug, I'm sure there will be additional competition which will come through. The street was anticipating $75 to $80 million in terms of sales for this particular drug in 1 year.
Okay, thanks a lot for that. Here's a quick recap of our top 10 stocks. Let's start with the list of stocks with negative news flow. INFOSYS, ICICI Bank, UPL, PC Jewelers, Kesaram Industries, DCB Bank, Tata Motors and Dr. Reddy's. While stocks with positive news flow today are Escorts and Aurobindo Pharma. So maybe there could be some green ticks there. But let's also find out some more stocks that are in the news today. Anisha is here with more. Anisha.
Hi Sonia, good morning. Thank you for that. I'll start with the ones that came out with numbers over the weekend. First up, we have Bajaj Corp. Well, the domestic business saw good growth. In fact, the volume growth came in around 14% ahead of estimates. But actually, the institutional business dragged the revenues a bit. Nonetheless, Macquarie has an outperform rating on the stock with a target price of 637. Moving on to the other stocks which will be in focus on account of results. BEPL, for example, the numbers were unimpressive. The revenues were down about 20%. Profit remains flat. There was perhaps one fire at one of the facilities, and that is what impacted the numbers. Moving on to CCL Products, it looks like a good set of numbers coming in from CCL Products because revenue is up 20%, profit up 46%. Cochin Shipyard has signed a shipbuilding contract, so that will be in focus. And lastly, on All Cargo, there are unverified reports that suggest that they're in talks with a global strategic investor to raise around 1,000 crores, and this is perhaps for the warehousing business and could be completed over the period of next 2 to 3 months. Back to you.
Okay, thanks for that. Rima, just dial.
Well, on the 20th of this month, the company will consider results as well as a buyback. Now, they're sitting on ample cash. The cash as of March was close to about 1,200 crore rupees. But before we get very excited, last year, the company, say, had cash on its book of close to about 800 to 1,000 crore. At that time, the company did a buyback of only 84 crores. This was a market buyback, which means at a maximum price of 700 rupees per share. But when you actually look at the buyback details bought by the company last year, they bought the shares at an average price of 375 rupees, so much lower than the 700 rupees maximum price that the market buyback had indicated. But so market buyback at best, I guess, will provide some downside support to the stock, but for the upside, we'll wait for more details on the 20th.
Okay, thank you very much for that, Rima. Let's get to the big story this morning, the trade deficit number for June, which has widened to $16.6 billion. It was $14.6 billion in May. But 16, 17 was where the trade deficit was when we got into that big taper tantrum, and of course, current account deficit at that time was even over 5%. This 16.6 billion at a 43-month high, is it something to worry? Abhishek Upadhyay, the economist at ICICI Securities primary dealer, is joining us. Good morning, Abhishek. Is it already time to worry? Are you increasing your current account deficit numbers for the year?
Hi, morning, Lata. So I would not, this number was modestly higher than our expectations, but I would really not call it a big surprise. That is simply because the widening this month that we have seen is mainly on account of higher petroleum trade deficit. And you would have partly expected that because in the month of May, if you recall, we had seen an unsustainable rise in petroleum product exports. So there has been a payback to that, plus slightly higher crude import bill, which follows up because of higher crude prices that we saw in later May and June. So that is the main driver. Also, if you more broadly assume that any trade deficit above $9.5–10 billion adds to your CAD, then this is the broad monthly range that you would expect to sustain when you're forecasting CAD of say $75–80 billion, which is a forecast. So I'm not really surprised this number. In fact, I would expect similar monthly prints to sustain going ahead in the year as well. Whether it is a worry,
the trade deficit to sustain at 16.5.
Broadly, it should sustain at around 16 to 16.5 levels, assuming crude prices are where they are.
Okay. In fact, I was coming to that. The oil import bill has risen substantially. You expect this level of almost $13 billion on oil imports to also sustain, given the way crude has risen?
Well, if crude prices average close to $75 billion, $75 a barrel, then you would expect these level of imports to sustain. The interesting thing is that the fuel consumption remains strong, so which follows up because growth is doing slightly better. So that adds to the strain on the petroleum import bill as well.
Okay, so you're not raising your CAD, nor are you weakening your rupee forecast, are you?
No, so this number, as I said, Lata, is more or less in line.
Okay.
The worry, I would say, is mainly on the capital account in the near term. So higher CAD is a worry, no doubt. But these worries have been compounded by the struggles that we have had on the capital account over the last quarter. So if you see the BOP deficit, which is likely to have accumulated over April-June, that is likely to be close to $18–20 billion.
Okay.
So context, in the April-June quarter in 2013, where taper tantrum was at its peak, we had a deficit of $10 billion. So we had double that amount. The difference is that CAD that time we could suppress by lowering the gold import bill. Right. So CAD over that quarter was actually only about $5 billion. We are at $17–18 billion this quarter. So it's a mixture of events. I would expect rupee really to be a function of dollar trajectory, which is highly uncertain at this stage. Okay. If dollar is to gain further, there's a risk of further capital outflows, and that will be a drag.
All right, Abhishek, we'll leave it at that. Thank you very much for joining us. Let's see how the market reacts, whether it is shocked by this number or whether it is, as Abhishek says, something everyone factored in. Here's what you can look forward to today. We learned from sources that the LIC board is likely to give a go-ahead to increasing its stake in IDBI Bank to 51% when it meets later today. So that's also a stock you should keep on your radar, though we don't know anything about how it will move. It'll be a stock that you will have to anyway watch. Yash Jain is joining in to line up the expectations. Yash.
Well, Lata, if you remember, June 29th was the day when the insurance regulator gave its approval to LIC to raise its stake in IDBI Bank to up to 51%. And today, that is July 16th, the Board of Life Insurance Corporation of India would meet to give its approval as far as this particular transaction is concerned. Now, of course, the headline approval will be to allow LIC to raise its stake in IDBI Bank to up to 51% from the current 10.82%. But there would be various finer details which would be discussed in today's board meeting. The most important, LIC board will discuss a turnaround plan as far as IDBI Bank is concerned. The finer details of the turnaround plan would later be communicated to the Finance Ministry. Also importantly, the Board of Life details of the turnaround plan would later be communicated to the Finance Ministry. Also importantly, the Board of Life Insurance Corporation of India would decide on the name of the nominee directors who would be sitting on the board of IDBI Bank and who would go from LIC's end. We are given to understand that about 2 to 3 directors could really sit on the board of IDBI Bank. third and the most important one, LIC could also discuss a timeline as far as bringing its stake down to that mandated 15% is concerned.
All right, Yash, thanks a lot for that. We'll keep an eye out on that deal. Let's take a quick break on that note. Lots lined up on the other side with our technical experts, Ashwini Gujral, Mitesh Thakkar and Sudarshan.
Welcome back. Well, the Nifty has been trading above 11,000. The Sensex has been hitting all-time highs. The mid-cap index, of course, is telling you a different story altogether. Even on Friday, that index was down 200 points and advanced decline was about 1:3. Ashwini Gujral, Mitesh Thakkar and Sudarshan Sukhani with us. Good morning, Ashwini. Thoughts on the index first, Nifty and Bank Nifty, how to trade?
Well, good morning. And for the last 2 days, if you sold around the previous highs, 11,060 thereabouts, you've been able to make money. I think that trade should continue because after a fairly vertical rally, we are getting stalled. So that remains my first trade. But overall, it's not immediately looking like a market which will decline sharply. For that, we need to break 10,950, 960. So basically, right now, a range of 10,950 to about 11,060, 11,070. But it looks unlikely we are going to cross the upper end in any sort of hurry.
Okay, but therefore, is it a short trade at all? I mean, and on both indices, Ashwini, Nifty, Bank as well as Nifty.
See, the bias is on the short side unless proven otherwise.
Okay.
So, the market needs to prove it can stay above that zone for us to, reverse our positions.
Okay. Sudarshan Sukhani and Mitesh Thakkar are also with us. Gentlemen, morning to both of you. Sudarshan, last week was a good week for the bulls. You expect that positive trend to continue this week as well? And what would the trading call be for the day?
Yes, good morning. Well, this is a different week. And the big scenario is a bit confused because we've had this rally, this blistering rally from 10,500 to 11,100 almost. Our pattern targets were 11,100. We didn't quite reach that place, but we almost reached there. So I assume that the pattern is through. Now, the best case scenario for the markets is a process of consolidation. And that consolidation is always difficult for traders. The trend changes if we take out the Wednesday correction low of 10,923. Till then, I'm assuming that the trend is up, but buy only on dips because in a choppy market, buying at highs or buying at rallies simply puts us in a reversal. So if the Nifty comes to 10,080 or we're close by, then there's an intraday buying opportunity. But apparently we are entering a consolidation, which is a difficult trade for traders. So keep trading volumes low.
Okay, but keep trading volumes low. Mitesh, good morning. How are you approaching the indices?
Good morning. So while my overall bias is positive, I think that 11,070, which was one of the targets which we had been talking about, I think will possibly keep the market subdued. And if you take the last few days of movement into context, we've had a good up move from 10,700, 750 zones. And in 5 sessions, we hit about 11,070. And then I think last 2 sessions have been kind of sideways. So I think the sideways activity might continue for another 2-3 days. As long as we don't break 10,970, 10,960, I would be positive, and I would also suggest a buy on dips kind of a strategy. But on stock specific basis, I think we are trading with both long and short bias because the rally is slightly narrow. So I think on stock side, you are getting shorting opportunities as well.
Okay, so let's talk about the stocks then. Ashwini, what would be on your list this morning, both buys and sells?
No rocket science in the buys, FMCG type companies. Asian Paints is a buy with a stop of 1350, target of 1410. Britannia is a buy with a stop of 6400, target of 6620. REC is a sell with a stop of 98, target of 92. Jet Airways is a sell with a stop of 336, target of 320. And JSPL is a sell with a stop of 210, target of 198.
Okay, fair enough. Just wanted to ask you, INFOSYS, Ashwini?
See, I don't think they are blowout numbers, and because of TCS, etc., good numbers were priced in. I don't think it's going up in a hurry. Could consolidate, but I think more money will move towards TCS because of these numbers.
That point is well taken. TCS
should be the beneficiary.
Could widen further. INFOSYS may not rally from here, may not fall too much, but may not rally too much from here. Mitesh, what are your picks?
I have a sell on Biocon, and in fact, after a long time, it seems like the stock might give some kind of a decent correction. There's no pivot breakdown, so I would sell with the stop at 611 for targets of 575. A buy on Gas Authority, wherein I believe that the medium-term indicators are now turning positive, so buy with a stop below 350, look for targets of 375. A buy on Piramal Enterprises, where the intraday charts were quite positive on Friday, so keep a stop at 2490. Look for a short-term target of around 2575. And a sell on Canara Bank, which made a fresh swing low, so that's a sell with a stop at 238 for targets of 215.
Okay. Well, thanks for that. Sudarshan, your stocks, I notice you have Dr. Reddy's as a buy. There is a minor negative news that's come on it, but you still think the chart will prevail?
I think the charts usually prevail. The stock is in a strong up move. If there's a minor dip early in the morning, then you buy that much lower. So but first, quickly about the Nifty Bank. The Nifty Bank is now developing into a positional short sell with a stop at 27,100. It's a high risk trade, so use put options to take it, but it's still now coming out. Stocks are mixed, buying and selling both. HDFC is a buy. The stock could be, if at all the Nifty stabilizes, HDFC could be one reason why it does so. So that's a buying opportunity. NIT Tech is in a consolidation for weeks altogether. If it breaks out, it will be a handsome gain and a big move upward. So we buy this not only for the day, but also as a positional trade. And Dr. Reddy's is a buy too. Two short sells quickly. Canfin Homes, which is doing nothing, making new lows. You know, the prospect, I've been bearish on NBFCs and that continues. And the second is Cummins. Cummins is in the bear market, which is surprising given the resilience of the Nifty. But that's making new lows again and again. So two short sells intraday and buys and a confusing market.
Okay, all right. Well, we'll wait till we get more clarity on the market trend. Till then, we will analyze individual stocks. PVR was a stock that fell a lot in Friday's trade on news that the Maharashtra minister has said that outside food articles will be allowed in multiplexes. However, there's been a clarification that's come in from the operators themselves. Sonal is here to tell us more. Sonal?
Thanks a lot for that, Sonia. And as you rightly pointed out, PVR and Inox were two stocks that have been focused on Friday, as one of the Maharashtra ministers said in one of the conferences that outside food will be allowed in multiplexes in Maharashtra with effect from August 1st. Now, Multiplex Association of India, they have issued a clarification where they say that none of the members operating under that association have received any sort of clarification or any sort of report on this particular matter, and they are not aware of any decision to this effect if it is taken by the government. Already a PIL with respect to the same matter has been filed and it is pending with the Bombay High Court, and they do have a hearing on 25th of July of this month, so they are awaiting that. But as of now, looks like it will be some breather for these stocks today.
Okay, Sonal, thanks a lot for that. Ashwini, I wanted to take this up with you. In the past, whenever we have had instances where PVR has fallen 10-15%, I remember once was the promoter stake sale. A couple of past incidents. There have been buying opportunities. You reckon this could be one more?
See, I would think so. While everybody talks about Netflix and Amazon Prime, etc., those are bigger threats. Here some compromise will work out, etc., and possibly it's a small issue. These days, social media is used to blow up things. I don't think this is a big issue. A bigger issue is technology going to change very fast? And maybe in 2 years, cinemas would be a thing of the past. That people should consider. But any sort of, decline 20% because of something that hasn't happened yet, I think should be, prima facie buying opportunity.
Okay, that's the chart call. We will take a break on that note. We will track the stock of INFOSYS. When we return, we will have an expert joining us. Welcome back. The stock of the morning is definitely going to be INFOSYS. Their revenue growth has come in lower than estimates, but margins were in line with estimates. The company's also maintained its FY19 guidance on constant currency. Girish Pai of Nirmal Institute is now with us. Good morning, Girish. Well, actually, post TCS, one had expected that a minor outperformance on estimates would be announced by INFI. That didn't happen. There have also been some high-level exits. How do you think the stock will react?
Yeah, so INFOSYS actually outperformed Nifty by about 20 percentage points over the last 6 months. So I think the stock was kind of factoring in some kind of upside movement on the guidance front. So I think if I look at the consensus estimates for 1Q of FY19, it was probably on the higher side compared to mine. And so the numbers, revenue numbers per se, came in kind of in between my numbers and the consensus numbers. So it may have been a tad disappointing to consensus, but was slightly higher than mine. The margin was definitely a bit of a positive surprise. But if I step back and look at the overall picture of the industry, I believe that the INFOSYS team is kind of getting its act together at a time when the industry is probably going through its best time periods. So post global financial crisis in 2008, 2009, I think the IT service industry is probably seeing its best demand environment. And here we have a company which is struggling to get its act together when it should have been accelerating, just as what TCS has done. So that is the bit of a, a kind of a dichotomy between TCS and INFOSYS as we speak. Hopefully that should be behind them maybe in the next, 6 to 12 months. But having said that, I think the bigger question to ask is this putting together of the act coming too late in this economic upcycle? Because somewhere down the road, we would think that US economic growth is going to slow down. That is going to have a detrimental impact on Indian industry growth.
Girish, the other thing that I noticed in the numbers was that the commentary on deal wins has been very positive. I mean, 40% of the new deal wins has come in the BFSI segment, which is growing very well. And even the digital business has grown 26% this time around. Do you think all of these are catalysts for the stock to move up higher in the near term? I mean, keeping that comparison between TCS and INFOSYS aside, purely for INFOSYS, do you expect the stock to move up higher in the near term?
Today, maybe.
Do you expect the stock to move up higher in the near term?
Today may be a little difficult, but I think, yes, there are some positives in the numbers that have been put out in the Q1 results. So the large deal TCV at 1.1 billion is definitely a positive. And within that, the mix between renewal and new large deals is also a pretty big positive. The new deals are constituting about 47% of the total TCV number, which compared to what the number was for FY18, it was largely renewal driven. So to that extent, it is going to be positive from a near-term growth standpoint. I think the margin picture also looks fairly interesting in the sense that I don't think you're going to see any kind of great upside from here, because one of the things that the company said was that there was a fair bit of attrition for high performers, and they talked about interventions on their part to reel in that attrition number. So my sense is there could be some monetary incentives given to the high performers to stay back, and that could put some pressure on a little bit of margin up move that typically one sees in INFOSYS over the course of the year. Typically it starts with a very weak 1Q and then the margins continue to improve. So yes, I think there are some positives, but I think it'll take a little bit of time to play out, maybe towards the second half of FY19. But having said that, I think the revenue numbers and the margin numbers should be broadly in line with the guidance that is given. I don't think there's going to be any kind of great surprise on that particular front. We'll probably have to wait for FY20 guidance to be given.
Okay, well, finally, of course, the INFOSYS ADR was down 4%. So today, that may be the way the stock will react. I don't know. What's your price target?
So my price target is about 1328. It's just about where the stock price is. So we have an accumulate on the stock. We don't think there's any kind of great upside from here. We're kind of giving the stock a 16.3 times multiple on FY20 earnings. And this is a 20% discount to the target multiple we're giving TCS, which is at something like 20.4. So unless rupee appreciates materially from here, we don't think there's any kind of great upside on the earnings front. Unless financials tank dramatically, I don't think there's going to be any kind of, when I say financials, I'm talking the financial sector in India tanks dramatically. I don't think there's going to be a great shift of money away from financials into tech. It's already happened to a great extent. I don't think there's going to be further stuff happening. Unless that happens, I don't think there's a PE multiple expansion coming the tech sector's way.
Okay, all right. So 1328 is your target price for INFOSYS. Thanks a lot for joining us and giving us that view. That's the lowdown on how to approach INFOSYS. But what about the other stocks? Vinod Sharma of HDFC Securities joins in. Vinod, hi, good morning. Last week was a good week. You expect the upside trajectory to continue, and what would the trade be today?
Yeah. I think the markets will continue to be positive, and the markets will gradually acclimatize to the higher altitude at which they find themselves in. And I want to draw your attention or the viewers' attention to two things. One is that Reliance has been largely responsible for this hike. It has gone up 15% in the current series. If we were to look back, there are 3 instances in 2017 when Reliance has contributed more than, it has gone up more than 13 to 18%. In 3 times it has happened. Now, in one of those times, it's not necessary that needs to come back and fall down in the next one drastically. One of the times in, let's say, in February 2017, when it went up by 80%, in the subsequent month also it rose by 7%. So what I'm saying is that this breakout has happened after 8 months of consolidation. So to think that Reliance would definitely go down next month, maybe it is preparing for further, it could be a trap. So I will continue to be long in Reliance. I'll buy the 1100 call at 21, stop loss. It quoted at 25, sorry. So I'm buying it 21, stop loss is 15 and target around 32.
Could you take us to other places?
Yeah. Another stock is Kotak. Why Kotak? It continues to do well, 30% OI addition, 5% stock price increase. More importantly, it is way different than the other private sector banks who lend directly to customers. The defining fact sector is there is no uncertainty regarding the promoter for the n number of years to come. Okay. So that is what. So definitely I'm buying it, and you can buy the 1420 call, 13 rupees stop loss, and 35 is the target. And one more stock I'd like to add is Titan. Titan has come back from the slide that it has seen. We saw some addition of 4% in the price, no addition to OI. I'm buying the 840 call at 21, stop loss at 16, target around 30.
Okay, Vinod, thank you very much for dropping by and giving us your trading strategies. Okay, with that, let's put some commodity cues as well on the table. Manisha Gupta is here.
Morning, and thank you for that, Lata. Starting with the crude oil prices, and we have seen prices under pressure, 1/4 to 0.5% down for both the varieties, and this is as the supply concerns ease in the global markets. One is that the Libya port has started export activity, so that would mean more supplies into the market. Even the US is looking to withdraw from its strategic reserve of 600 billion barrels, so that would also mean increase in supplies in their market. Apart from that, there also is potential of increase in output from Russia and Saudi Arabia. So while there are bullish fundamentals as well, the markets really seem to be focusing their attention on few of these right now. The base metal prices have been quite volatile. If you look at the copper prices, we have seen some buying come back onto that one. The second quarter GDP data from China that just came a few minutes back is in line with expectations at 6.7%. That is a slowdown from the last quarter and month-on-month estimate as well. But then the markets were working with this number. What would be important to watch, though, is the US president and the Russian president meeting in a summit in Helsinki today. There are expectations that there could be a talk about the sanctions that US has laid out on Russia, especially Rusal. So the aluminum prices have been quite jittery ahead of that. The expectation also is that there could be some easing or lifting of these sanctions on Rusal, and that would mean increase in supplies in the global markets. And aluminum really seems to be trading slightly weak ahead of that.
All right, thanks a lot for that, Manisha. We'll take a short break on that note, but when we come back, we will have the pre-opening rates with us.